we're going to go into a recession, if we go into a depression, then there's a chance we could go into a great deleveraging. If we go into a deleveraging, that's not going to be good. So this is why I say to all the people that message and say, oh, I'm in the city, I'm in an apartment in, this big city, and I think everything's going to be fine. Yeah, history doesn't really say that, to be honest. History says things are not going to be fine. And that's why you've heard me talk a lot about all of my plans and what we're doing. Moving, that will be the next thing that we're doing. Just taking precautions, really, so that no matter what happens, we're in a good position. And I'd say the same to all of you. Just be careful as we go forward. Don't put yourself in a precarious situation. Don't just think all of this is going to go away, because it's not. And already we've seen some pretty disturbing things just in the last week and a half, escalations in certain countries. So yeah, just be vigilant and don't bury your head in the sand like a lot of people are doing, because this isn't going away. Can the system be saved, Daniel? No, I'd say the system can't be saved as it currently is. And even when they do the CBDCs, yeah, they'll probably still call it a dollar, a digital pound, a digital euro, but they won't really be. They're just using the same names to make people comfortable. These will be something completely different, very disturbing, and I'll cover all of that on tomorrow's video. You've got to think of these in terms of liquidity. So don't think of the stock markets and everything that's in the finance world at the moment the way you used to think of it, which was in productivity. That doesn't really exist in the same way anymore. These are sort of zombie markets, as it were. So they're being driven up by liquidity and not productivity. What do I mean by that? Well, mainly we're talking about debt. So if you think of all the currency that exists now, the bulk of it is debt. It's not actual, what we would consider value. And you're seeing, we're going to be going into some sort of a deleveraging as well in the future. We just don't know when it's going to happen. So think of everything at the moment in terms of liquidity. When you've got a lot of liquidity, it has to go somewhere. When you've got the Federal Reserve buying up 55% or whatever number it is now of all the mortgages in the USA, and they're pumping in money and they're doing this and they're doing that, and you've just got record low interest rates, you've got people hanging on to assets rather than selling them. Think about people who used to sell their home when they moved. You're a family, you move from one house to the next. What would you always do traditionally? You would sell your first home and then you would buy the next home. It's called a chain, very simple. Well, we haven't been seeing that in the same way that we used to, and that's certainly through our agencies, our business partners, people I mentor. What you're seeing a lot of is people are keeping that house and then they're buying another house as well, and they're using the previous house as an ATM, so releasing equity, renting it out, getting a rental income on it. So these are all the things, the patterns that have helped to sort of move these assets bigger and bigger and bigger. So we're seeing a lot of this. Is the EU sovereign debt default, and there's a lot of other things you could talk about. Is that, and again, this is what Stephen is asking. I'm not saying there's a sovereign debt default going on here, although most markets, most currencies are in some stage of a crisis, however you look at it. So yes, sort of, but really you want to look at liquidity. That's the way you want to look at everything in terms of liquidity. QE has definitely helped to push up prices, but it was really the amount of debt, the low interest rates, and a lot of speculation. And again, remember in the stock markets, what you've actually got is very few of these big stocks which are holding up all the rest and making it look as though we're in this crazy stock market, when really a lot of the stocks are in a bear market territory. You've only got some really big stocks that are pushing it into a bull market. So that's the way I would probably say to look at it. See, I personally don't hold bonds. I'm not a huge fan of bonds. I think they have their place, but the reason, if I didn't know about all the different asset classes, then yes, I'd probably buy bonds. I'd hold bonds. But for me personally, if I've got a choice between a piece of paper that says, someone guarantees to pay me money, or holding that same amount of paper in, say, gold, however, small or bigger an amount that was. Now, you're not going to get any dividends from, or payments, or coupons, or anything like that from gold, but at least you've got it in your hand there, and it's safe and secure. So if I had a choice between bonds or holding physical gold, for example, I would much prefer to hold physical gold. That's the way I'd look at it. But remember, you can also take fiat currency and you can, get good interest rates on it with different things. We were just talking on the monthly investment video about some of these platforms at the moment offering 3-4%, some of them 5% interest rates on fiat currencies. In that situation, what would I be looking to do? And again, we'll probably come on to cash at the moment. In fact, let me talk a little bit about cash, because I don't know if this will come up in another question. But one of the things I've been talking about over the last week in the private community is this volatility. And I feel like I've probably saved people a lot of losses, especially overnight, because I had more than a dozen messages just this week saying, Neil, I'm thinking of investing, some people, huge sums of money. I won't even go into huge sums of money into the crypto space right now. And my guidance to those people and really to everyone is, and look what's happened just overnight, was maybe just wait. What I'd be looking to do is take any funds and cash and maybe moving it into some of these crypto platforms, like diversifying it, let them pay you a little bit of interest on the fiat, but just position it, because it is quite difficult to get your funds into some of these platforms. If you really want to go into crypto, I would say just be a bit more cautious right now. I personally don't think now is the perfect time to be buying into crypto. I would be personally, if you're already holding it and you're happy and you've bought it and you're holding it for 5 years, you don't need to do anything. Just keep doing what you're doing. Hold it for 5 years, whatever you're gonna do. Don't worry about these ups and down blips. But the only thing you need to worry about with anything at the moment is if one of these dominoes falls, it's going to pull everything down. Just look what happens when the stock market starts to drop, like we saw. Straight away margin calls. People are liquidating everything. All these people, I was watching this YouTuber, expert on crypto. He didn't even understand why the crypto market fell this week. Talking about all sorts of stuff. No, it's very simple. When you have margin calls in the stock market, and then a few hours later, the crypto market starts to drop every single time, 4 times in a row, it's not a coincidence. This isn't rocket science. So this is the way I'd be looking at this right now. I'd be looking at, we've got a lot of risk right now, a lot of volatility. I wouldn't be gambling on certain asset classes. What I would be doing is, sure, you can buy bonds if you want to buy bonds, and some people really are in a position where if they are in pensions or funds or managers or brokers, you haven't got much options as to where you move. But if you do have options, I'd probably start to look at a cash position. Now, obviously diversify that and look at alternative stores that aren't, the big commercial banks which can bail you in. You can all be bailed in pretty much in most countries now. Start looking at this and start looking at where you can actually hold your cash, your money securely, so that, and just be patient. One thing that always makes me laugh is people say, Neil, if I'd have listened to you, I'd have missed out on 10% gains. Yeah, okay, you might have missed out on 10% gains, but what about when it crashes, right? And sometimes these things, different segments, but sometimes markets can crash 40, 50%. It varies depending on the market. Well, what if something crashes 50%? I don't care if you missed a 10% run up, if I've just saved you a 50% loss. So you've got to see it. This is the way I look at it, and the way I approach it, and the way I sort of explain things to people. It doesn't bother me in the slightest if people lose out on gains, if in the long run they're going to save on these crashes. It's just common sense to me.